Hey folks, did you know that not all tax deductions are created equal? If you have any self-employment income, a rental property, a seller finance property, a sole proprietorship, an S Corp, a C Corp, a partnership or an LLC, you need to understand that some of the new tax code that has come into place is going to have a huge impact when you go to file your tax returns and apply for a mortgage. Thanks for coming into thecreditjungle.com. This is George Anderson.
George of the jungle, strong as he can be.
And this is something that I always start doing early spring every year is I send out mailers and emails and videos and whatnot, but not as many people that get the message, understand the message, sometimes until it's too late, because when you file that tax return, okay, that once that's filed and you've paid the taxes on it, you're probably not going to be able to do an amended return to show more income so that you can qualify for a mortgage. So that tax return is going to stick with your income calculation for at least a year and sometimes 2 years, just depending on what type of loan you're getting. So just before I dive into the details on this, there are certain types of deductions that the amount that you take on your tax return, you might take a $10,000 deduction, but we have to count it as $20,000. There's other deductions, if you take $10,000, we just count it for the $10,000, and there's some deductions you take that you count $10,000 and we add it back into your income. There is a difference between what your gross income is on your taxes, what your net income is, or your taxable income is. Those are all completely different numbers than what an underwriter uses to calculate your effective income or your qualifying income for a mortgage loan. So my advice to my clients, and I've been doing this for, well, maybe not my whole career, but at least for the last 20 years, is that go ahead, meet with your CPA, your tax preparer, whatever you're going to do, and get the taxes done the way that your CPA would recommend them. Make sure that you've got something you feel like it's a complete return and reflects, a pretty accurate representation of the business or whatever situation you have here. Let me see the final draft. And with that, I'll say, okay, well, the way the underwriter is going to look at these deductions is that you're going to have this much income that's going to be your effective income in case you decide to purchase a home over the next few years. So if that's enough income for something that you want to do, great. If you're not planning on doing something right now, but you think you might in the next 12 to 24 months, there are things that we can do there and make adjustments on some of those deductions that would raise your qualifying income but have no impact on your taxes. So if there's a way to do that, wouldn't you like to know how that works? So thanks for coming into thecreditjungle.com. This is George Anderson. And again, let me take a look at that final draft of your tax return to make sure that you are addressing how you take these deductions and how you categorize these deductions to optimize what you can qualify for a mortgage loan and minimize what you owe in your taxes. Take care and have a wonderful day. Bye-bye.
George of the jungle, strong as he can be.